last time we were focusing a lot more on the sort of financial aspects of cryptography, of cryptocurrencies. And I think today in our chat, we're going to focus a lot more on blockchain as a technology. I think what went really well for some of you who were there last time was a lot of audience participation, right? We do not want to make this a low energy, boring event that we all forget about. We want to make sure each and every one of you gets something out of this, where you can ask very intelligent questions to a very esteemed guest. Mark is a very, very key figure in this space. But most importantly, to try and get a sense of where things are going, because this summer, as we know, there's a lot of activity. And because of so much activity, we really have to get a sense of what's most important for the market and what's changing the market. So before we get started, just a general thing, we're going to do a presentation by Mark on some of the theoretical aspects of today's presentation, and then we'll open up to a fireside. During the fireside, it'd be great for you guys to ask a bunch of questions, and we'll try and cover a lot of ground. And most importantly, I hope you all have some fun. Great, let's get started.
Awesome. So I think you guys all have my background. I started the first exchange in the UK, first Bitcoin exchange, and now run CoinFLEX, which is a futures exchange. And so I'll just dive right in here. So when I was 17, I started a business in LA, a tech consultancy. Basically, this goes to the problems with centralization and the banking system, and the reason why blockchains are even needed in the first place. Because a lot of the time, people think about blockchain and crypto, and they think about all these elements that it is, but they don't think about what to compare it against, and they don't see why it's actually not just kind of useful and interesting, but also needed. So when I was starting this company, I was 17, and the bank basically wouldn't give a business account to any business that had a minor as the owner. So obviously that's a problem for taking payroll and clients and all sorts of things, and it just causes problems. So there were ways to get around this, and basically registered it in the name of a relative. But 2 years later, when it came time to sell the company, and I got an offer, it basically made it very difficult to sell because of the way the company was initially set up. So when I moved to London and set up the first Bitcoin exchange, we dealt with a number of similar issues around banking. Banks were very uncomfortable because they'd just been fined billions of dollars. Banks around the world had just been fined billions of dollars for money laundering by the US government, unrelated to crypto. But they were very paranoid about anything that seemed high risk. And at first I thought this was just a crypto problem. But in London, I spent lots of time with other entrepreneurs and other people working in finance from the FX industry, the payment services industry, and also the online gambling industry. And these were all regulated industries in the UK at least. And London was kind of an epicenter for all those three businesses. And I learned from kind of my friendships in that space that these problems that I'd experienced from LA to crypto in the UK were not just problems that I dealt with, but they were problems that wide swaths of the commercial world had to deal with, which was opening and also maintaining bank accounts. Something which, as an individual, is pretty much a boring part of life that doesn't usually take up a lot of time, sometimes is a headache, logistically speaking, but isn't something we as consumers think about very much. And the reality is that for many consumers all around the world, they simply don't have the identity documents, the address verification documents. They might live in an undocumented way. They might not have a passport. Many people don't have the ability to get a bank account. Many people don't have the ability to do KYC. So this is where we get into different architectures and the architectures around decentralization and centralization. So there's a very important principle at work. It's a quote. I'm quoting someone. I don't actually remember who said this, but someone said this to me along the course of my journey in crypto, which is that it's possible to build a centralized system on top of a decentralized system, but it's impossible to build a decentralized system on top of a centralized one. So you can think of that as, if you have a blockchain, it's possible to build a business that uses that blockchain in a centralized way. CoinFLEX is a typical example. We're an exchange. We're centralized. There are payment companies that use crypto. There are other companies that use crypto. It's possible to use crypto in a centralized way, but it's impossible to take the banking system and build a decentralized or revolutionary or a truly accessible system on top of the banking system. So this is a very important distinction between the two. And this is the way the traditional financial system works, which is there's a layer of central banks, there's a layer of banks on top of those central banks, and then there's businesses, fintech, and financial institutions on top of that. And the top layers have to be sort of subservient and controlled by the layers below them. So if the government who controls the federal bank, if the government or the banking system says, we're going to do this, then the banks have to implement it. And the banks have to go to the businesses. They can cause all these things to happen. So this is what we saw with the US government and industries like online gambling, which in the UK is a perfectly legal and in fact regulated industry. But because the US government was fining all these international banks, many banks in the UK had to close the accounts or be very selective of these British businesses. And in fact, what we saw is it creates more centralization. So when you have this type of infrastructure, the biggest gambling companies or the biggest payments companies or FX companies can succeed, but anyone who isn't the biggest basically gets ignored. And the effect of that is ultimately higher prices because it trends towards monopoly. It's low amounts of innovation because innovation is seen as risky. And it's a worse experience for the end consumer. So you have stagnant industries where incumbent players basically maintain their monopoly advantage. And the consumer, despite technology continually making the world better, the consumer gets screwed. So here in this system, any business that wants to get off the ground has to get approval from the layer below it. Regulated FX companies, fintech companies, and online gambling companies all had to rely on the banking system. And in many cases, in the case of the FX and the fintech companies, they were actually disrupting and they were making better services than the banking layer below them. But if you think about that, they need banking and they're trying to disrupt it. So the end game for fintech is basically getting sold to a bank and silenced or subsumed. I was also friends, during my time in London, I was also friends with the CEO of a challenger bank that ended up IPOing and becoming $1 billion company. Totally regulated, totally compliant bank. We were meeting one day and he said, my biggest problem is that Barclays will control every product I want to launch, every new thing that I want to innovate on, and anything that I really want to do. And this bank was a bank that was kind of, the UK government was heralding them as, look, see, we're not only allowing 100-year-old financial institutions, we're allowing everyone to have a level playing field, and we're allowing new entrants to the banking system. Well, I didn't know this until I'd finished writing the speech, but this bank, so it's not on here, but I checked the share price of this bank, and it's basically gone down 97% in the last 3 years. So they're basically toast. And it's just symbolic of the conflict here. If you have to run by your plans by your biggest competitor that is lazy and restrictive and selective, and hey, at the end of the day, I had personal bank accounts that got shut down by Barclays, so I know what he's talking about. If you have to run by these plans, by these competitors, you can never hope to truly compete. So this is why fintech is screwed. The end game for fintech companies will just be being bought up by the banks. And the banks will have total monopolistic pricing power because they can just turn off the fintech companies if the fintech companies get too big. So the end game is like maximizing your acquisition price and hoping for an acquisition. This is very, very different to any tech company or any type of disruptive revolutionary business that's really trying to make the consumer experience better in an unrestricted market. So what do we have as an alternative? Basically crypto. Bitcoin, Ethereum, other blockchains are decentralized at the base layer. So this means like if a 17-year-old wants to open up a wallet and start a business, they can do so without getting approval from anyone in the world. And if a bunch of incumbent businesses want to shut down someone's business, there's nothing they can do about it. If anyone really wants to censor you, it becomes impossible on the blockchain. And it also means that for the world's poorest people, there's now an opportunity that doesn't require approval, identity documents, and all sorts of restrictive measures that might completely exclude them from the financial system. And the reason this works is no one's in control of the base layer. So unlike this system where at the base layer you have a central bank controlling the banks and everything on top is access gated. In the crypto economy and on the blockchain, there is no point of central control. So ultimately, the end game is something that looks very similar to other networks. So here we have the concept of Metcalfe's law. And you see that on this price chart as well. Metcalfe's law is that the number of connections in a network increase exponentially with the number of participants in the network. So here we have 3 connections, and there's 3 lines you can draw. Here we have 5 nodes on the network. This is a phone network. And at 5, the number of connections is 10. And at 12, it's 21. And if you keep going higher, it exponentially increases. So we've already seen this effect with things like social networks, Facebook. We've seen this effect with things like big data networks and with Google. And I think this effect will be very, very similar with crypto. Right now, about 1.5 or 1 to 1.5% of the world's population is using crypto. And that's the reason why it's worth over $1 trillion if you add up the market caps of all the crypto coins. But once that goes from 1 to 2, it's not a 2x increase. It's probably a 10x increase. If it goes from 1 to 10, it means that the number of people you can transact with on the blockchain goes up over 100-fold. And that's why this is interesting. If you think about industries, you have to think about where the gateways are, where the access points are, and how controlled they are and how free they are. And when you think about the telecom industry or any type of regulated industry, there's much less room for innovation in anything where the base layer is controlled. So it might be controlled by the physical laws of the universe. You know, you're producing a physical good and selling it in a street. Well, there's a lot of restrictions there. You're restricted by just gravity and how heavy things are. There's government restrictions. There's power restrictions of running a business on top of a monopoly. If you're building your business on Facebook or YouTube, YouTube can shut you down. Facebook can shut you down. These are closed networks. These are closed protocols. Crypto is offering something totally different. And this is why I think, a lot of people prefer freedom, free systems, and totally uncontrolled markets. This is why, basically, if you look at the next few years, and if you think about predicting what would happen in the start of the internet in terms of how the internet was used, many people would say, okay, yeah, like selling simple items and kind of these Amazon type business models and some other business models were pretty apparent. No one ever predicted Uber and no one could have predicted most of the business models that we've seen in the last 5 years of the internet. And that's because you have, in the early days of the internet, you have just the internet. And then you have the internet everywhere in the world. The internet pervading not just on, kind of landlocked devices, but on smartphones. And so once blockchain, we're now in the phase where everyone's starting to slowly get the blockchain. And that's not even happened yet. Again, 1%, right? Once everyone has this permissionless system, the types of businesses that get built on top will be completely insane in terms of the exponential growth. So one example of this in terms of, it's all well and good to say that there are going to be amazing business models that get built, but let's talk about some real world examples. One of them is market making. So that market making is buying and selling things, buying something ideally low, selling a bit higher. It's fundamentally an act of trading. The earliest financial market makers in terms of financial instruments have been pit traders. So the kind of, if you've seen the movie Trading Places or some other movies, kind of people shouting numbers and screaming at each other in this kind of violent frenzy. My co-founder was a market maker on the London Financial Futures Exchange. And market making went through one revolution from physical to electronic. That was because of the internet and computing. And now it's going through a second revolution. So this revolution already made markets drastically more efficient. The prices of financial instruments went from this kind of system of phones, calling people up, going to the floor, something got traded. Who knows at what price? Was it fair? Maybe, certainly very manual. And the world was more volatile and less liquid. The world, everything in the world, every financial thing at least. So this was one improvement that already has created an enormous amount of wealth for people. It's created better pricing. It's created more liquidity. Many markets have moved to 24 hours a day, maybe not 7 days a week. This second revolution, I think, is going to be just as impactful. And some of you guys have known the impact from just this first revolution from floor to digital, to electronic. The second revolution, I think, is going to be just as impactful, where this third thing is what we call automated market making. And the pioneer of this was in the crypto industry, Uniswap. So Uniswap created a system where you could put in two assets, let's say USDC and Ethereum, so a stable coin and Ethereum. And as the price went up of the asset, people would trade against you and you'd sell out of one. And every time you sold some Ethereum, you'd move the prices. And the bot would do all this for you. So you'd be selling Ethereum at higher and higher prices. If the price moved back down, you'd be buying Ethereum back at lower and lower prices. And the formula ensures that as Ethereum is range bound, if it reverts back to the initial price, you just make money. And if it goes really high, you sell out of your Ethereum, but you don't lose money. So you just end up with a big pile of dollars. This is not exactly the same strategy that the electronic market makers or the pit market makers use, but it is a strategy that everyone can understand. And it's simple enough that if you do believe in the asset, let's say you believe in Ethereum, and you're happy to buy more of it on the way down and sell out of it on the way up, it's one that you can get comfortable with doing. And what Uniswap has found is over 100,000 people have become comfortable with this strategy. So it's basically, the way I like to think about it, there's Hong Kong Exchange, there's CME, there's a bunch of traditional futures exchanges. They used to have maybe 100, maybe a couple hundred of these guys. Now they have maybe 1,000 people managing these types of robots, providing liquidity. Maybe 10,000, maybe 1,000 to 10,000, let's say, per exchange. Working at different trading firms, managing algorithmic bots that trade on exchanges. Uniswap has 100,000 people providing liquidity on their automated market making system. I think this is more than any traditional futures or equities exchange in the world. So again, crypto is lowering barriers to lots of very tangible businesses. This is not some abstract thing that I'm predicting is happening at some point in the future where payments and all sorts of parts of commerce are going to be changed. This is changed now. So this has lowered the barrier of being a market maker from something that you could only do if you're physically present into this room to obviously the second stage, anyone with a bot and an API can do it, to now you just need an interface and you can do it. And we've created a version of this that we think is going to be higher return because it plugs into futures markets instead of spot markets, which Uniswap plugs into. And it's available at coinflex.com/AMM. But whether you use our product or use Uniswap's product or use someone else's product, the concept of an automated market maker is a game changer. It's a game changer that's only possible because of the access that crypto markets bring and that the blockchain and a fundamentally decentralized base layer brings. And it is already disrupting a very large, one of the largest industries in the world, which is just trading. So that's one of the early results of this. It's one of the ones that I'm most excited about. Another one is interest rates. And we talked about this at the last one, which is, at the end of the day, banks have this model, which is they borrow really cheap and they lend out really expensive. We all know what credit card rates are. They're often 20% annualized. And we all know what bank savings accounts pay. It's usually less than 1%. Sometimes it's, a tenth of 1% per year. So FlexUSD is a stable coin we created. There's a bunch of other alternatives as well. You can use Aave, Compound, you can use BlockFi, Celsius, a bunch of different places. And if you just compare the interest, this was January to July. It's $4,100 versus $50. So most people would rather have more money than less money. And this is another reason why decentralization creates markets where rather than borrow here, lend here, it's let's meet halfway. Let's get the borrower similar rate to the lender. And that's why this is powerful. Again, this is not something we're projecting this business is going to be built in the future and crypto is going to be part of it. This is right now. Another thing is Bitwage. This is a way to manage payroll globally using crypto. It also plugs into local banking systems and payment systems, but it allows an employer to simply insert crypto, stablecoins, and pay people around the world and manage payroll. This is something that is extremely difficult for all kinds of businesses. There's the flip side of this, which is BitPay, which allows you to accept Bitcoin or any kind of crypto as a business and automatically get converted into dollars. And actually, BitPay was one of the first entrepreneurs that I met in the crypto space. I met the founder of that company in 2012. But these companies are also tangible ways where crypto is being used today to bypass really expensive banking and credit card and payment rails that are not just expensive, but they cut people out. So if you want to get set up to pay in lots of different currencies, it's lots of paperwork, time. The financial costs, sometimes they might not be that bad, but the cost on your time, especially as a business that's getting set up, I remember, here's a funny stat. So not many people know this, but CoinFLEX, when we first started out, we raised $4 million entirely in stablecoins. And for 6 months, we didn't have a bank account. So we were able to pay all of our employees using purely crypto and stablecoins with no banking. We were able to raise money, millions of dollars, with no banking. And we eventually got bank accounts, but it wasn't a worry for us. It wasn't something we had to rush to do because we had crypto, we had stablecoins. So we did it when we had enough time to go through that process, and we did it at a leisurely pace rather than saying, oh, wow, we've got this great idea. Let's immediately slam our heads against the wall and go through these boring operational procedures in order to accept investor funds. No, when you're starting a company, you want to get going immediately. And that's the power of crypto. And I'm not saying this as like, this is some theoretical thing. We raised money and paid people for 6 months without getting banking. And so I know this is a tangibly, useful tool. And employees can take stable coins, cash out into fiat, pay their bills. It works great today. And again, this is another use case. So obviously one use case for Uniswap is providing liquidity. The other use case for Uniswap and lots of these decentralized exchanges is trading. It used to be possible. It used to be the case that when you want to get an asset listed on an exchange, the only way you could do it is by pleading the exchanges, begging that your product get listed. Now, anyone can trade basically any asset, even if it's tiny, on Uniswap, on a decentralized exchange, without requiring the big exchanges to list it. And it's very powerful for creating liquidity in new markets. And the last example, maybe the most complicated, but we all are probably somewhat familiar with the concept of a hedge fund or a mutual fund or some kind of money manager. The idea is someone smart will take your money and invest it wisely and take some sort of fee. Right now, I've talked to lots of people that have set up hedge funds, and most of them say that you probably need about $1 million of capital just to set up the fund. And in order to, and that's like capital that you keep, but it's not expenses, but $1 million of capital and maybe $50,000 to $100,000 of expenses. So before you've made any money, before you've hired any people, 50 to 100K of legal and administrative expenses. This is a hedge fund. This is a decentralized hedge fund, effectively, that has a number of strategies on managing capital that all pay the creator of those strategies. Anyone can set up a strategy. So you can go home, go to yearn.finance, create your own strategy for managing stablecoins or Bitcoin or ETH or whatever, and you can get paid. The strategy can get added to the system, it will get advertised, and you can get paid. No need for all these administrative expenses, no need to, deal with lawyers and paperwork and banks. So I thought it fitting to sort of end with a quote from the Matrix before we go to questions. Ultimately, if I were to say where this will bring us is exactly here, I'd be lying. The power of this is that no one knows. The power of this is it's a system where anything is possible. And the end game for the internet was this. No, I'm just kidding. There is no end game for the internet. We're still seeing how that revolution is played out. The end game for crypto is going to be very, very different, even in 2 years' time, if we get to 2.5% or 3% of the global population. The end game at 10% changes again. In fact, most of what I experienced today in crypto was not possible probably 4 or 5 years ago because stablecoins were invented. So even just things like the invention of stablecoins have completely changed the way the crypto economy works. And in a year's time, something else is going to be invented that completely changes how crypto and the crypto economy works. So it is really this thing where crypto brings freedom, freedom brings prosperity. People want more freedom. They want more choice. They want more options. And they don't want to be building on systems that are inherently locked down and tied up. It'd be great for a number of you to ask questions. I hope you found the presentation interesting. But yeah, tell us more about what's going on with NEO at the end, a world without boundaries. What does that mean to you? Well, I think the powerful thing about all this is if you think about any system, any digital system, any internet-based system, Google, let's say, as an ecosystem, Google has parts that you can build on top of. So as a content creator, as a podcaster or a video artist, you can build on YouTube. You can create music videos, create podcasts, create things on YouTube. As an individual, you can post pictures on Instagram, and many people do that. But ultimately, these are centralized systems where if the platforms themselves say, hey, we don't like what you're posting, we've been told by a government that we have to restrict this. Hey, we actually have this issue here where this is not okay for some arbitrary reason that they may not even tell you about. They can censor you. They can shut down your business. And for some people, it's a small thing. For some people, they're just posting food. For other people, it's their livelihood. So if your podcast or your content or something that you're doing is your livelihood, again, people's livelihood exists in the banking system. If you have a bank account shut down, what can you do? And if you have funds frozen, what can you do? And so that's where I think the power of crypto is that where we go from here, I leave to you. And it's what you make of it. So once you enter into a system where your money is completely yours in a sovereign way and in an unfreezable, untouchable way, the possibilities are endless. That's what I mean by that.
Awesome. So it seems like I know other questions from the audience, and it's really great to see people engaging. We really want you guys to ask questions, but it seems like a number of them start to focus on the regulatory hurdles that lie ahead of us. The UK and in China, there's been a number of pressures with China on the mining side and the UK banning finance. So when you think about these regulatory hurdles and the role of government in this boundaryless world, where do you see it going over the next, let's say, 6 to 12 months?
Yeah, so it's a great question. And the fascinating thing is when you start to look at regulated spaces, you realize that regulation in and of itself is a huge task. So governments regulate all kinds of industries. Again, gambling, payments, FX are one, but healthcare is regulated, and also any energy, power, utilities, all these things are regulated. When you think about the way regulation is conducted, it's not always the government going in to a business, investigating it, looking at it, and making sure everything's kosher. The government has limited resources, so they have to use the systems that they control. And this is why most of finance is regulated by the government through the banking system. So again, some hedge fund is doing something sketchy or some payment company is laundering money. Well, the way that's discovered is actually the banks saying, hey, this looks odd, please stop. And the banks actually can say that, they can actually do that because they hold the hedge fund's money or the payment company's money. It's different in crypto. The base layer is decentralized. So once you start off with a base layer that's decentralized, the governments can see things that they don't like. They can say, oh, Binance is causing problems. Binance is allowing highly levered trading. But who do they go to? They can go to other governments. They can all issue warnings about exchanges. But Binance takes deposits not through the banking system. They take deposits through Tether and other stablecoins and crypto. They might sometimes use credit cards, and that might be on the periphery a mechanism. And that can be shut down. The governments can literally shut down Binance's access to credit cards and any sort of fiat deposit mechanism. But shutting down a crypto exchange like that is very difficult. You have to actually get to the people involved. For Binance, it's more difficult because who is the person you have to get to? CZ is obviously one of them, but he's not the only one. So ultimately, I think the regulatory thing is going to be really interesting. And at the end of the day, regulators are probably going to have to come to terms with the fact that they're losing power in this industry compared to the power they have in other industries.
Can we just touch base on that power thing really quickly before we keep going on? Again, guys, please keep asking us questions. It makes it way more fun when we answer the questions that you want. But when you think about a government willingly letting go of power, I can't think of any governments that would actually want to do that, right? Especially when you think about bank accounts, data privacy. Is there a world in which the two can exist? Good regulators to avoid bad actors at moral hazard, in addition to maybe a decentralization to allow for innovation and boundaryless banking?
Regulation will always exist on the onboarding and offboarding ramps. So anyone who's entering crypto is probably going to have to interact with a regulated entity of some sort. Whether in Hong Kong, it might be going to Genesis block, and you might be sending them some Hong Kong dollars before you get your Bitcoin or Ether or stable coins, and you send that to an exchange. Genesis block is regulated. They're a money service operator here in Hong Kong. Coinbase, regulated in the US. Huobi and OKX are both synthetically regulated by the Chinese government, in part because they kind of have ownership stakes in these companies and control the founders. But effectively, once you go beyond that step, once you've got your money in crypto, there is a limit to how much regulators can do. And I would describe that limit very similarly to regulators' control over messages on platforms like WhatsApp, Telegram, Signal, Reddit, Quora, or any forum. Ultimately, if you're on the internet, you have way more power over your own life than people 100 years ago. So 100 years ago, people didn't have a lot of power. They didn't have a lot of control. We got new freedoms. We got new controls, new abilities to control our lives, whether that's the vacuum cleaner, the airplanes, or the internet, or mobile phones. And these things weren't things that intentionally took power away from governments, but people became more powerful. And in a way, if you think about the pie chart, that may reduce government power, but it's also just good for humanity.
Awesome. There seems to be a question about CoinFLEX, and feel free to go into as much detail as you'd like, or as little detail as you'd like. Can you explain in a bit more detail how CoinFLEX is able to pay between 6 to 30% versus close to 0% at regular banks?
Yeah, so it's a variable interest rate, and it's completely transparent on the transparency section of our website. But basically, this is from our repo order book. So this is a funding play where you're funding leveraged loans that are trading on CoinFLEX. And it's an over-collateralized funding tool. So the other side is always more than $1 collateralized. But it's basically providing leverage to people that want to be long crypto. It's similar in many ways to the Fed's actions in traditional repo markets. It's a short-term borrowing facility. And because it's over-collateralized, it's extremely low risk. So this is not lending. FlexUSD is a lending stablecoin. It's not lending to people that then take the money off platform and do whatever they want with it. It's lending on an over-collateralized basis. It's always taking more collateral, either in dollars or stable or crypto, than it's lending out. And what that means is it's always worth $1 because it's always backed by more than $1.
Fine. Let's keep going. So we talked about in your presentation automated market making, right? And you did talk about Hong Kong Exchange and some of the traditional exchanges like Chicago Mercantile Exchange, CME. One of the questions is, are automated market makers going to overtake the traditional exchanges? And my question to kind of take it further is, what parts of it are they going to take over first? Because there's no doubt it's already happening, as you said in your presentation.
Yeah, the short answer is yes, they will. The longer answer is it's a bit more nuanced than just a simple yes. Automated market maker, for us, it's a product that exists within the ecosystem of our exchange. So it's not competing with CoinFLEX as an exchange. It's a way for users to participate in providing liquidity on our exchange. And what that means is, previously, if I wanted to make markets, I had to go to the physical pits. Then I had to get an account electronically and program a bot, which means I had to know how to program and trade electronically. Now, in order to do this same kind of liquidity providing trade, I just need to click a few buttons on CoinFLEX.com. The impact that has is it widens the group of people that can be market makers. So previously it was a couple hundred on an exchange, then it became maybe 10,000. Now it could be, you can have a system where millions of people around the world are market making. And I think that will have a much bigger effect than anyone realizes on volatility. So when you think about the world, prices of assets go up and down. When they go up and down a lot, it's called volatility. The ability to buy lots of a thing and sell lots of things is called liquidity. More liquidity is generally good. More liquidity generally makes markets less volatile. And a less volatile market is a better world because people have more certainty over prices. They have more feeling like they can borrow against their assets. They have more ability to do business. And so I think the end result of this is that probably we're going to go from a situation where around the world, maybe there were a couple thousand or 10,000 or 20,000 market makers, to a situation where maybe 5% of the global population has some percentage of their assets in market making. And that will take a long time to happen. That will probably happen over the course of the next 30 years. But if that happens, liquidity will go absolutely, probably 1 million times more than it is today. You will be able to trade way more of any asset without moving the price. And yeah, that's going to be wild.
Just as an extension, so that's a pretty wild statement, Mark. What do you think about the relationship between price and value, right? Price, we know in the short term, can be very, very volatile and not reflect true value of a company, a product, a service, whatever you think. Do you find that all that excess liquidity that will come in with automated market making is going to increase or decrease the sort of disparity between price and value, between the fundamental correlation between those two levers?
I think it will increase the discrepancy between tradable assets and non-tradable assets. Because right now, when you think about shares in a public company or tokens that represent a company's value accrual, like we have our own Flex coin, you think about these things and you think about they have a premium over less liquid assets, private shares you can't sell, or private equity stakes, or a share. Anything that's less liquid should be worth less. Anything that's liquid should be worth more. And if global liquidity goes up 1 million-fold, then the difference between something that is tradable and something that isn't tradable will go up massively as well. Because all of a sudden, anything that's liquid is going to be having people devoting some capital to market making it. You'll be able to sell way more of it and buy back way more of it and borrow against it. Anytime you can buy and sell something easily 24/7, the ability to lend against that thing goes up massively as well. So that's what FlexUSD is. If you think about traditional lending markets, housing and real estate, it's difficult to lend against a house because, in a month's time, it takes at least a month to sell it. It might take a few weeks, but
so little liquidity.
How
do you determine the price even?
In a way, it's one of the most liquid markets because it's a big asset. Real estate is trillions of dollars, but it's also a very illiquid asset because of the time it takes to sell it, and it's not fungible. It's not easily tradable. So lending against crypto assets, as much as crypto is volatile and it moves up and down like crazy, lending against crypto assets is way safer because there's so much liquidity. It trades 24/7. I can sell $1 million worth of Ethereum against a loan in 1 second, if I needed to. And so the fact that you can do that with crypto makes it an asset that is better than almost anything else in the world. You can't even do that with many traditional assets if it's night or weekend and the market for that thing is closed.
Awesome. So it's not really brought up here, but a question to all of you. How many of you are aware, beyond the word, of what decentralized finance is? Please raise your hands. How many of you know what decentralized finance is? Well, how many of you would like to know what decentralized finance is? Okay, Mark, do you want to just give a quick crash course? What is decentralized finance and what is the relationship between that and some of the fundamental technologies we've been speaking about?
Basically, crypto was built on this principle of decentralization, where you can't shut down the blockchain itself. And as soon as it came out, a number of businesses started getting built around crypto that were being built in a similar way to the banking system. So CoinFLEX is, at the end of the day, an example of that. And we're moving forward towards decentralization, but we are in no way full DeFi for the purists out there. So decentralized finance is basically taking the same concept of crypto, which is creating a truly decentralized currency, and it's applying that to business. So rather than trying to create a decentralized currency, it's creating a decentralized lending business or exchange business. So Uniswap being one of them. On the exchanging side, Compound and Aave being decentralized lending businesses. As I mentioned, Yearn.finance is a decentralized hedge fund or mutual fund, however you want to see it. And basically, this concept is, well, shouldn't Yearn.finance have to get registered as a registered investment advisor? Shouldn't they go through the same legal processes because they exist in this world? How can they get around these regulations? Well, if a regulator said that to the founder of Yearn, the founder of Yearn can simply say, okay, but there is no physical way to enforce these rules against me. Because if you put that guy in jail, or you fine him, or you stop him from being able to interact with the code, the system will still run regardless of its founder. It will run regardless of the owners or the operators of the business. So it becomes something that isn't exactly a business and almost represents like a blockchain because it is impossible to shut down. And a lot of things claim to be DeFi. This is the area where you have to be careful. A lot of things claim to be DeFi, claim to be decentralized, but are actually still ultimately centralized businesses. So probably 5 or 10 or 1% of the businesses that are in DeFi are actually truly decentralized in this way. But the powerful thing for those that are is it creates a space where you can operate with less friction. And that's the power of DeFi. Less friction, more safety for the end consumer, and it makes it easier to get off the ground with any type of activity.
Just as an extension to that, because I don't know about you guys, but pretty much every website I look at, they bring all these random words, right? They pretend to be decentralized when they're not.
Yep.
They talk about DeFi, they talk about market making. They just throw in pretty much every word: blockchain, decentralized, coin, token. Like, there's just so much noise out there. And perhaps I'm speaking to some of you here. I mean, there's just information overload when you hear all these terms. One quick question for you before we move on. How can the average person who's bombarded with all these just daily bombardments of news, DeFi, blockchain, coins, this, that, how do you make sense of all this information? Because the industry is evolving so fast. Do you have any ideas, advice on how people like us can keep ahead of the industry and the evolution of the industry?
Most of crypto is a scam. Oftentimes, the people that are nicest in the space actually have the intention of stealing your money. If anyone is kind of pestering you with incessant questions and they seem like a really nice guy, you should be careful. But this is the downside of a less regulated space, because in the traditional financial ecosystem or the traditional ecosystem, if someone is stealing people's money consistently again and again, they will be restricted over time. They will not be able to get bank accounts. They will not be able to do all sorts of things. They might go to jail. Regulators want people to perceive crypto as this dangerous thing. So sometimes they don't punish bad actors. And other times, bad actors can, get past them simply because the mechanisms regulators usually go after players in traditional finance is the banking system. And if you're in crypto, you can completely bypass the banking system. And so you don't need to do that. And so it becomes easier to scam people. So the barriers to entry to scamming people in this space are lower than the banking space. What that means is it's really the flip side of freedom. If you think about freedom is also responsibility. So you have to be more responsible over your own funds. If you send it to somewhere and they take it by claiming to be decentralized or whatnot, and then actually they're not, and they, kind of steal all the money in the smart contract, there's no one to complain to. I don't know if there's a lot of upside to this, because ultimately the way to figure out what to trust is everyone has to decide that process for themselves. But it involves, from my perspective, it involves talking to people that I know that are intelligent, trying things out with small amounts of money before piling in with bigger amounts of money, and getting really, really comfortable with things over time rather than all at once. So it's not like the banking system where you might open a bank account and then move all of your money in or have all your money stored there. It's an ecosystem. I think someone much smarter than I have kind of described Ethereum as a dark forest. And they were describing this concept of minor extractable value, but it applies broadly based to most of Ethereum and most of crypto, which is, it is a space where you have to watch your back. And I think the easiest way to do that is simply to talk to other smart people in the space and to consume lots of information before going into some of these things with large amounts of money.
How do you separate between noise and signal? You see all these new projects coming out. You've also built a number of different elements to the CoinFLEX business. So how do you distinguish when you're adding real value to customers and you see real, genuine, industry-changing, world-changing projects versus the nice guy who's trying to shake your hand a little bit too much?
As a business, how do we judge what's worthwhile in the space? We really tend to think about, okay, is this just a speculative token that's trying to get more people to buy in at the next hype phase and eventually just try to cash out and pump and dump? Pump and dump, exactly. Is this a pump and dump, or are these people that are trying to offer something that can't be done in the traditional markets, can't be done in other parts of finance, and can be done in a way that actually makes the world more efficient, reduces prices, gives people a better user experience, anything like, or the things I often love the most are things that can't be done outside of this new mechanism. So many things in crypto, like trustless lending, the idea of lending where you're not lending to someone, but you're lending to an algorithm, that's never been done before. All lending prior to crypto, all lending was to a person. Might be to a business, might be to a big business, but at the end of the day, there are people running that business. And in crypto, you can actually lend to an algorithm. That's very new.
So let's talk about that. One of the questions that just came up were some of the challenges that you see facing the tokenization of these illiquid assets. We talked about real estate. You're quite familiar with private equity, startups like ours and many of those that are in the region. These are relatively illiquid assets. And then you talk about innovation, trustless lending. How do you foresee the challenges and how do you see what sort of illiquid asset classes are going to overcome those challenges and what sort of assets are just not right for this tokenization theme?
Yeah, so I was asked earlier today whether I thought tokenized stocks would take off. And maybe this is controversial, but I actually think the answer to that is probably not, because there is no regulatory advantage a tokenized stock has over an actual stock in your brokerage account. So I think the innovations that crypto has is decomposing the idea of equity as an ownership system and almost combining the concept of having upside in a business with the concept of like a Starbucks gift card and combining these things in a way where you get a new asset altogether. So Binance was one of the first businesses that probably did this with BNB. We've done this with Flexcoin. There are lots of DeFi projects that have this as well. Aave and Compound both have these things. And basically, it's a token that represents the ability to use the thing, but rather than always being worth $1 or $5 worth of coffees, it effectively gains appreciation with the usage of the platform. And so I think that's not, strictly speaking, a stock. It doesn't represent ownership. You can't take a bunch of them and take control of the company. You don't have any legal rights to the business itself. But if it can perform some of the same things, whereas the project or the company does well, it does well financially, then maybe it doesn't need to be a stock. And so I think that as an alternative to equity represents a huge leap forward because equity is limited geographically and financially. And these types of tokens have far fewer limits, if any at all.
What do you think about the future of DeFi, automated market making? Now, I run Xccelerate. We're all about human capital. What sort of intelligence, what sort of skills, what sort of talent, right, do people need to have, do innovators need to have, do some of these companies like Genesis Blocks and Finances need to have? How do you think about careers in this space? How do you think about skills and talent and human capital? Because ultimately, the best projects usually have, I like to think at least, the best human capital running them. So what are your thoughts there?
I think one of the most valuable things is being multifaceted. So having two or more skill sets that aren't necessarily directly related to each other and being able to tie them together in interesting ways. So being able to program and also understand business, being able to sell and also do design, being able to have a few different perpendicular skill sets is extremely interesting. Anyone who can understand a lot of the complexities of the space makes themselves valuable on top of any other skill sets they have. So this space is very complex. It's usually too complex, and you see that in the early days of the internet, you see that in the early days of anything. Usually the first iteration is super complex. Then the UX and the UI and the user experience improve, and it gets simplified and simplified and simplified until the thing that's going on underneath might be complex, but the end user experience is one click. So being able to work across disciplines is useful. Being able to program generally is super useful. Being able to sell is always useful. And being able to simplify complex things into very, very simple things is extraordinarily valuable.
What are some of the top programming and technical skills that one needs if they're going to go build a new project in DeFi or this area?
Being able to program in the languages that Ethereum runs on, which is Solidity and Viper, are probably one of the most valuable skill sets in the space. Obviously, other languages like Java and C++ and Python and such are valuable as well. I think Solidity is somewhat similar to JavaScript, and Viper is somewhat similar to Python. But at the end of the day, Ethereum has by far the dominant lion's share of developer expertise. And so being able to program in a language that is compatible with the Ethereum blockchain is the most valuable programming skill in crypto.
But it's not just technical, right? Being able to understand design, product, of course, engineering, business, marketing, ops. I mean, this is an area that has a ton of opportunity for some of you that are thinking of a career or an industry in this career in this industry. So we'll just wrap up with one final question, and then we'll open up to networking. Let's talk about CoinFLEX. So you guys have come quite far in a very short period of time, and huge congratulations. It's always been fun for Xccelerate and our team to work with your team. One of the questions that came up is, how did you build a community, right? And I think this is a really powerful question for anyone who's building any project, whether you're in the DeFi space or even for us that are in the education space. How does one build a community, a tribe, where people care about your token or your brand or your values and can really resonate with the founder's vision and mission?
I think it's all about like focusing on the value you bring to the users and the network effect value. So with CoinFLEX, basically all of our products are ways for people to make money, ideally ways for them to make money simply and easily. And we sort of honed in on this concept of one-click earn yield or earn, trading fees and trading volumes or what have you. And so for us, you mint FlexUSD, you're making money from the interest rate. You use the AMM, you're making money from the volatility of crypto. These are other products, it's kind of similar. And everyone is bound together by the more volume the platform does, the more they make from whatever product they're invested in. So really the products are very parallel to themselves, to each other. They all feed into each other. The AMM feeds the returns of the other products. The other products make things better for the AMM. And everything makes it better for the actual users of the exchange themselves, people that are trading the futures and the spot markets directly. So for us, it was focusing on kind of connecting all these markets, making them very easy to use, and then we're very capitalist. So the community is kind of built around making money.
Fantastic. Ladies and gentlemen, please join me in giving Mark a huge round of applause.